Hey everybody, I'm gonna give it a couple minutes here, a couple seconds to see some folks roll in before we get started. Um, Before we get going, I'll introduce myself. My name is John Cumberworth. I'm the CEO and founder of Acting Executives, and we provide frameworks, playbooks, systems, and executive leadership, fractional executive leadership to law firm owners and law firms throughout the US. So I'm very excited to have a fellow fractional on with me today. So Leah Miller, fractional CFO with L&M Financial Services. And we're going to talk today about the financial health of your law firm. And I'm really excited to get a CFO's perspective, not just my perspective as a business owner, but getting it from Leah. So Leah, if you want to talk a little bit about yourself and we can get started.
Hi, it's great to be here. I'm really excited as well. I started as a paralegal in the field and worked my way up to firm administrator and CFO of a personal injury law firm. And I left that earlier this year to start my business and reach as many law firm business owners that I could and just help them better understand their finances and how to use those finances to make decisions when they're growing their firm.
Very cool. And as we go, we don't have a lot of slides to go through today. We're just going to have a conversation. And Leah's going to share her insights and expertise on the financial side. But if you have questions, throw them in the chat. I'll keep an eye on those and we'll answer them throughout throughout the conversation and then make sure we have time at the end as well. So, Leah, if you could kind of get started, just tell us a little bit about how you approach the revenue and profitability for law firms.
So I like to say, revenue is an important number to look at, and that's normally what people are looking at when they're talking about the financial health of their law firm. And so, you make a goal for the year that you want to hit $2 million. But what's really important is to know your profit, and that is how much you have left over at the end after all of your expenses. And so you may be making $2 million a year, but if you're spending $2,100,000 a year, then you're not profitable. And so that's how I help my clients is looking at increasing that revenue number and what we can do to increase that, but at the same time, making sure that our expenses are in line with our goals and our profit goals and what we want to do with that. And so, we can do that by looking at our expenses and seeing if, certain categories are too high, like marketing or your wages. Those are two of the higher, expenses that you have in a law firm, and seeing if we can make some changes there so that we can get you the profit that you want and need as a law firm owner. And on the flip side, sometimes people aren't spending enough on those categories. And so we also want to make sure we're spending enough of the money and we're, spending that so that we can increase that revenue as we go along.
And so what are some of the best practices in terms of the reporting or specific things you look at, yeah, as a law firm owner or a CFO?
So I like to say that, a lot of people they say I have my CPA, that's what I need for, doing my bookkeeping. And I agree, you need a CPA for taxes, but there's a lot more that you can do with your finances outside of what's needed just for your tax preparation. And so that can be done at the most basic level with your bookkeeping and how you categorize transactions. One of the big ones I talk about is wages. Instead of lumping all of your wages in as wages, you can kind of break that out into, associate attorney wages, support help wages, and things like that. And so you can really see where the profitability is or where the issues might be when it comes to that. And so from a basic standpoint, I think that's really important just to make sure that you are doing your bookkeeping in a way or having your bookkeeping done in a way that can let you analyze that data and make those decisions that you need to make in the future. So I would say step one for tactical advice today is sit down and look at your profit and loss statement for the year or just the last month and see how everything is broken down. If you have a firm that does more than just one practice area, make sure you're splitting up your income by practice area so you can see what's profitable there. And then as you go through, make sure that, the basic marketing and things like that are split up, but like I said, those wages and things like that. So you really know where your expenses are going instead of just lumping everything into office expense.
Yeah, I think you mentioned looking at the P&L monthly or the past year. What's typically the best for you in terms of looking at it on a monthly comparison, a quarterly? How do you typically look at that?
So I like to look at it on a monthly comparison instead of just the whole year together. So you can run a report for January through November and see everything in one year. But I like to do the whole year broken out into months. And I think that's really important for law firms to look at that as well because there's a, up and down when it comes to revenue. And so again, going back to the planning process, you can kind of use that profit and loss to see where your revenue is higher, where your expenses are higher, and what months are a little bit lower and things like that. So I like to break it down month by month, so that you can really, use that information to plan for the future because that's what I do for my clients and what I try to teach is making plans for the future and decisions for the future that are more strategic and intentional as opposed to do we have money in the bank today to, have this big expense we have coming up.
Gotcha. And you touched on something pretty important, the breakdown of revenue. So if you have, say, a PI side and a family law, you're going to want to break that out separately. Can you talk about how to do that a little bit and some of the reasons why?
Yeah, so I think one of the biggest reasons is just to see if doing that separate or that extra practice area you have is actually bringing in money. So it may seem like it's generating revenue. You have clients coming in, there's money coming in for your family law part of your practice. But if your expenses, if it takes three more people to work those cases and your expenses are much higher for the family law, then you may be coming in, negative on that one practice area. That's not always a bad thing though. There's some law firms, they work in certain practice areas and it's kind of a way to generate clients for their more profitable practice areas. But again, those are decisions that need to be made from a strategic, intentional standpoint, as opposed to just hoping it works out. So I think breaking down where the income is coming from, where the revenue is coming from, helps you make decisions, staffing decisions, marketing decisions, things like that, so that you just know you're making informed decisions.
Based on the data? Yeah, that makes a lot of sense. So in your experience, what's been some of the apprehension that you've encountered from law firm owners or business owners with doing that analysis? Like what's kind of keeping them from taking that first step in analyzing that?
I think a lot of it in the apprehension just comes from not understanding the financials so much and not having the data there. Um, Thinking that it's too expensive to pay somebody to do this, type of bookkeeping. And it can be affordable and make sense. And there is, definitely a return on investment when it comes to spending that money on, good bookkeeping like this and with somebody who knows what they're doing with law firms. So I think that's where the apprehension comes from, just not having the data. It's not that they don't want to use it, and then not understanding all the way what the data means when you have it. And so that's, people like me come in and we get into the nitty gritty and really like analyze it and then, make it so it's easier to understand. But law firm owners definitely can go in and do this themselves. They don't need somebody from the outside. They can, look at their profit and loss and see where the money's coming in and
Right.
what the data is saying, as long as it's prepared in that way.
Yeah, I think back to one of my previous lives, careers, if you will, when I was running a business overseas, and one of my favorite days, I think it was like a Thursday morning. Every day I get the P&L emailed to me for my division, and I just love to pour over it. I kind of knew where the revenue was because we were on the sales side, but I really wanted to see how it was broken down on the expenses and what our profit margin was and things like that. So I missed that day, having that
Well,
excitement, but I could see if I wasn't comfortable with looking at what I was looking at, I could see that being more of a creator of anxiety,
yeah.
as opposed to like a Christmas morning type of a day. So that's interesting. Yeah.
Yeah, and that brings me to another tactical point, and something that law firm owners can do today after this webinar is making sure that you're receiving those financials on a regular basis. You don't want to be a month behind to send everything to your CPA to do your bookkeeping for you. I'm really encouraging people now to make sure that at least weekly, every other week, they know what's going on in their firm financially. Because if you get a month from now and all of a sudden you see your November was really bad, there's not much that you can do, to make up for that. And so,
Right.
um, you should definitely have your financial reports sent to you by the 15th every month. Um, from whoever's doing your financials. But if you can get somebody who's in there kind of updating this stuff as you go, so you can make mid-month decisions. We just got a really good settlement and we have these huge expenses. How should we handle that? And so it's just about making sure you have the information to make those informed decisions.
So you mentioned the P&L, the profit and loss. What other types of reports or what financial reports should a business owner say, hey, I need these on the 15th or I need these regularly?
Yeah. So definitely your balance sheet, which is going to show your assets and your liabilities. Um, a lot of smaller law firms, those are pretty straightforward and there's not much to those, but you still want to see, all of your assets, how much cash you have in the bank and what your liabilities are so that you can, make those decisions. Um, and then I think also doing, a cash flow statement and making sure where your cash has gone for the last month. And it's just a visual, even if you know the information, how much money you have in the bank, having that visual really makes a difference.
Gotcha. And I would assume there's also a factor of AR or accounts receivable for a lot of firms where they've sent the invoices out, they've sent the bills out, and they're like, great, we had a good quarter, but they haven't received the cash. So AR, I assume, is a good one as well to look at 30, 60, 90 days.
Absolutely. So, I hear a lot, well, I billed $50,000 last month and that's great, but if you only collected $20,000 and you're not, collecting that money, then you don't have the cash to, keep running your firm. And so keeping on top of that AR and making sure that those bills are being paid, using the technology available now to make sure, you're accepting electronic payments and things like that. And so there's not so much of a lag time of collecting that cash. So that definitely needs to be looked at by the 15th of every month so that you're sending reminders and things like that.
Gotcha. Yeah, there's definitely a lot of tech out there. LawPay, I know for sure, is a company that works in that same space. But we use Stripe. When I was at Client Chat Live, we built our own integration with Stripe, and it's pretty simple. They make it pretty easy for people to use. So interesting.
Yeah.
So as far as cash flow,
Mhm.
this is to me, this is a really difficult thing as a business owner to like keep track of months out. What do I expect to happen in the next 1, 2, 3 months? These are the cases I might be settling. There's a lot of different variables. How do you go about cash flow management with what's in the bank now, maybe what's coming in and out? Like, what are some best practices from your perspective?
So best practices is definitely keeping track of what you anticipate coming in. And, I see a lot of times people are like, well, we settled this many cases last year. This was our average. So we can figure that's what we're going to do this year, maybe increase that by 5%. It's a good way to start making decisions. But at the same time, you need to make sure you actually have that caseload, and this is a really big thing for firms that do contingency fee basis, like personal injury and things like that, because there's such an up and down. You have a really, really, really good February and you could have nothing in March. And so I encourage all of my clients and anybody I talk to keep track of all the cases that you have pending, especially contingency fee. If you're doing more transactional stuff, then you can use the averages and all of that a little bit more. But, you know, keep track of the cases, how much you anticipate them to settle for. Yes, things can change. No, nothing's going to happen exactly the way you think, but that's why you update that, every month, look at that and kind of keep track of, what you anticipate things to settle for, and then what you can anticipate happening in 6 months, so that you make sure you have those cash reserves, or, like, I can hire this new attorney today because we have this kind of caseload coming up. And so we know we're going to be able to pay our bills for the next 6 months. So best practice is definitely keeping track of your cases. Again, using that data like we talked about on your profit and loss, where you split out the services for your different practice areas. That's another reason, for forecasting situations. So you can see what your historicals are and then forecast using that as well. And so just really keeping track of what you anticipate coming in. And then you should know what your expenses are. And I encourage all of law firms to, especially now at the beginning of the year, would be a good time of everybody sit down and look at your expenses, look at your contracts you're under with all of your vendors, see if you can negotiate any of those, see if there's any that you don't need anymore. You just forget, you put it on auto pay and you
Mhm.
forget that you have something coming out for $200 a month. And it may not seem like a lot for you, but all those things add up. And so, this right now, this time of year, great time of year to sit down and just take an inventory of all of your expenses and see what you can get rid of, what's really working for you, and just, again, making intentional, informed decisions as you go forward.
Yeah, that's great. That's a great point. And I had someone bring this up to me recently as well, is when was the last time you looked at your contracts and things like that with your vendors? Sometimes there's just a flat price increase every year, boom, boom, boom. And they kind of not sneak it in. It's in the contract, but you're not really aware of it. But a lot of times, if you just get on the phone, you can negotiate better terms or better pricing if you just ask for it. And some of that takes some time and attention, like you said.
Yeah, yeah, for sure. And, you just don't, there may be other vendors that can do something better for a better price. And so, just taking the time, I think a lot of these vendors, they just kind of bet on the fact that nobody's ever going to really look at it, and they're good to go. So,
Yeah, for sure. And so you mentioned taking that time to put all that information together regularly, um, kind of sticking on that best practices. Does the partner or the owner have that much time to do that, or is it better to delegate, or is it better to say, if you know what you're talking about as an owner, go ahead and do it? But is that where a CFO comes in over a bookkeeper or CPA more so?
yeah, I think for sure, that's when it's better to bring somebody in. I can say, as a law firm owner who could be working on cases or working on business development, your time is better spent somewhere else. And so it is more efficient to hire, a fractional CFO if you're to that point, to do that, so that you're not the one looking and seeing, oh, this vendor's charging us too much. And so yes, those are the things that you need to be delegating. And they'll pay for themselves eventually,
Mhm.
so definitely look at delegating those things, because it's not, the attorneys don't need to get into the weeds of that every single day. So
Yeah, yeah, great point. And I was having a conversation yesterday with a business owner, and they were talking about another business owner that was arguing over a $40 invoice, something really, really small, and they were, not multi-million, but it was $2 million revenue business, and it was like, okay, a $40 invoice isn't going to be the end all be all. Keep your perspective. Look at the bigger ticket items first and work your way down, and then don't get caught up in, what do they say, stepping over dollars to get dimes kind of a thing.
yeah,
Keep
exactly. There's
perspective.
there's opportunity cost that
Uh,
lost there for sure. That
Yep.
needs to be looked at, and that's where, I say a lot of times what I do, everybody, law firm owners can do. But it's good to have the outside perspective of somebody else looking in, and maybe being the voice of reason of, like, okay, we just, like, don't worry about that $40. Let's just forget about that one, write that off. You've got a much bigger problem over here. And
Right.
so, there's that outside perspective of having somebody, and that's what's so cool about, the fractional space is you can get that person to come in and give you that outside perspective at a fraction of the cost. And so, that's why I tell a lot of people what I do and what I'm there for. Like, yes, you can run the reports and look at the reports yourself. I encourage you to do that today, everybody here watching this. But having somebody with that outside perspective looking in and giving you their opinion could be the game changer for you.
Yep. Or even with when I was at Client Chat Live, we weren't big enough to have a CFO full time, or even a CMO full time, right? So it made sense to have that fractional person come in and help out. I kind of wish I could go back in time and have that fractional CFO, so I wasn't at the end of the year or tax time going, I thought the CPA was going to do this and this. And it was just reporting the news. No offense to CPAs out there. They're
No, and that's
very
what
helpful.
that's what I tell people. CPAs are super important, especially for your taxes. I don't do taxes, so like, yes, you need a professional for that. They're also really busy. And so I think a lot of times there's just the disconnect of communication when it comes with that, where I hire CPA, I assume they're just going to tell me if I'm doing good financially or what decisions I need to make. And the CPA is like, just does your taxes. That's what they're hired
Hmm.
for. And so that's why I'm on a mission to explain to people the difference between a bookkeeper, a CPA, and a CFO. You need all three at some point. But back to your point about, not needing to afford certain, people yet. I encourage people, even if they're not to the point of needing a fractional CFO on a monthly basis, getting somebody to get in your books and really look at something on a one-time basis and, doing an analysis for you of just, again, that outside opinion of your revenue is good, your costs are a little high, maybe we need to look at this. Your wages are at 40% of your revenue. How's that? What's working there? Are there processes that need to be changed? Do you need to bring in somebody else to make some changes? So sometimes even if you can't afford the monthly or you're not to the point of needing the monthly, just having somebody come in on a one-time basis makes a big difference as well.
I think you mentioned uh, margin and some certain costs, right? Professional services, law firms, they're going to be very different from, say, a manufacturing
Mhm.
business or software company. The margins are different. The expenses and profit margins from that are going to be different. So, can you talk a little bit about ideal margins or something that you've seen as you've worked from firm to firm? Because it's one industry, you're
Yeah.
able to kind of see, hey, you should be more 20%, 10%, something along those lines.
Yeah. So if you're looking at your profit and loss and you're figuring out your profit margin, which is, your net profit divided by your revenue, is that's going to give you your percentage. Um, if you're at 5%, there's something wrong because law firms shouldn't be at a 5% profit margin. We want to see that closer 20, 30% or higher, depending on what your revenue is. And so, that's when we need to start looking at our costs. What are our costs? And like I said, the biggest ones, wages and marketing, those and rent and things like that. Those you don't always have a lot of control over. But like let's start with wages. If your wages are at 40 or 50% of your revenue, that's really high. We want to see 25, 30%. Um, and so there is an increase in your wage percentage when you're in a growth phase, but that needs to translate into increased revenue. And so if you're at 40% today, but your revenue is going to increase, you're doing the marketing and all of that, you're not going to be at 40% in 6 months because your revenue will have increased. If you're still at 40% a year from now, your revenue is not going up, then we're looking at a process problem because, a lot of times I hear they're like, well, my staff they're overworked, but we're at 40%, wages to revenue. And it's like, okay, there has to be an issue here. There has to
Yeah.
be a process problem. There is an internal problem when we're looking at those increased wages over a long period of time. Or that's how your business model is set up, and you're never going to see that 20 to 30% profit that you want to see as the law firm owner. And so that's when you have to balance out your priorities. Same with marketing. I see people that are only spending 10% on marketing, and I'm like, hey, you can spend more. Let's get that up. And I've seen people who are spending 30 or 40% on marketing because they have these huge growth goals, and that marketing is going to translate into big revenue changes. And that's good. But again, make sure that what you're doing is intentional and that there's a return on that investment as well. And you're not just signing a contract with a marketing professional who you're going to pay 40% of your revenue. Well, like, you don't pay a percentage, but it comes out to 40% of your revenue for a year and a half, and your revenue hasn't increased. There's a problem. And so,
Yeah.
there's no right or wrong, I say, with the margins. There's definitely, like, where people fall into in this, um, in the categories, but everybody has different goals. So, and that's, a lot of times I start with, what are your goals? And so as we go to set a budget, let's talk about your goals. This is what the budget needs to look like to reach your goals. And because every firm is going to look a little different when it comes to that, for sure.
That's a great point. I think back to my previous businesses, and it depended on it was dependent on what stage we were in. Were we in a growth stage where we want to spend some more to grow, and it's okay to see the margin lower, or maybe even be in the red sometimes, just to pay for growth. But we got to a point where it was okay. This is our marketing percentage. This is our percentage we can spend on people. And if our revenue dipped, it was one of those, like, 2020 revenue dipped, you don't want to have to make those decisions to adjust your wages or adjust the spend on people and headcount. It is what it is. You have to do that, or increase revenue, right? That they always say sales hides all sins. And it's true to a certain extent, but, like, we're in an amazing time right now of efficiency, and people are going to get more tools. Obviously, AI is the buzzword, but more tools, more technology to be able to do more. And then you've got to understand, your people have to understand what it is that they're striving for. What are their goals? So that they're focused and they're not overworked working on all these different things. They're getting the most out of their time, and you're getting the most productivity out of the money you're spending, right? So I love the idea of having those target percentages when you budget. So, kind of talking to that, how do you go about budgeting? You mentioned you talk to the owners about what are your goals. What's a good budget look like, or a process look like for that?
So I definitely start with goals. I have some clients, their goals are to make a certain profit, but work less. And so their wages, their people are going to cost more because they don't want to work as much, but they have a profit goal. So we need to, look at what that is. I have other clients who they want to do more of the business development and things like that. And so they have to hire more attorneys to do the legal work. And so that's why setting your goal and looking at your goal is a big deal. And I think the goals need to be more than just your revenue number. It's like, instead of saying, I want $2 million next year, well, what's that $2 million going to buy you? So that's, number one, sit down and think about, what are my goals? How much money do we have to bring in to reach those goals? Let's start there. I like to be realistic, but also give my clients goals that they're going to have to work towards. So we obviously want to increase over last year revenue. And so, start with that. And then I do start by looking, when I'm setting up a budget, of historical costs, because you need to see what you've been spending money on. And again, people may not even realize that they're in all these contracts that are, a couple hundred here, a couple thousand there. And so put that, and it's super basic and simple in an Excel spreadsheet. What's your income? What's your expenses going to be? And then we go through each of those expenses and really talk about that. And, this is where it comes in of, can we negotiate this vendor? Is this a vendor we can get rid of? Is this an expense we can get rid of? What do our processes look like? Is our team working efficiently? Does it make sense? And so we kind of get all of that out, laid down, look at what we're left over with the net profit margin. If it's in line with what we want, great. If it's not how much profit we want, then we start talking. Okay, can you get to a higher revenue goal for next year? Is that realistic? If that's not realistic, then we need to talk about these costs, because I say all the time, it's actually really simple. It's not easy. It's simple. It's money in, money out. That's your profit. And I sit down with my clients, and that's when we really start talking, and having that visual of seeing like the budget written out really helps give my clients that idea of like, okay, yeah, we really do have to cut out that expense that I, in my mind, thought we could afford, because, we've been floating and getting by somehow, but really, if I want to reach this other goal, we need to cut that out. Or how do we motivate our team to get more revenue generated and things like that? So that's my budget process. It's a very fluid process. um, you know, Things are going to come up. We want to stick to the budget. But as the year goes on, you need to look every month at how much you spent versus how much was budgeted. Did we overspend somewhere? Is it realistic that we only budgeted this much for this category? Maybe we need to, change that mid-year. What you said on January 1st doesn't have to be what you end up with on December 31st. It can definitely change and be fluid. But again, just being intentional and using that information and looking at it, I feel like there's such a it really makes a difference when the firm owner actually looks at the numbers every month.
For sure. No, I think, and talk about one of the main causes of stress, right? Is not knowing if there's cash, or not knowing if just basically not knowing, right? That
Yeah.
uncertainty. So I know, do you also look, and I remember doing quarterly rebudgets, right? After Q1, okay, this is the actual for the first 3 months. Let's adjust the next nine. After
Yeah.
6, let's adjust the next 6.
Yeah, absolutely. Every quarter sit down and look at, we've already spent this much in our marketing spend. We really only wanted to spend this much this year. Our revenue hasn't increased enough to make up for that difference. Maybe is there something we need to pull back on? Do we need to take from somewhere else? And just reevaluate what that is, instead of, and it's the same, like I said before, of looking at your financial statements throughout the month. You don't want to get to the end of the year and be like, oh, wow, we really overspent on this year, and it didn't translate to what we thought it would be. And so that's why you have to be fluid and make changes as you go.
For sure. What we talked about um, budgeting overall. Do you have any advice on a marketing budget and how to calculate cost per client and that kind of thing? That might be a little bit too granular here, but I think a lot
Yeah,
of
I
firms
don't
struggle with,
get
they throw
into
marketing dollars and then it's like, did that work? I don't know. It seemed to work.
Yeah, so I don't get into that so much. I
Okay.
will not say that I'm the expert on marketing. I can definitely help clients see how much, their average case value. That's something that we're looking at a lot now, is average case value. And so as we're marketing, are we marketing towards cases that are going to bring in more value? And then, maybe referring out the less valuable cases. And I talk a lot about, what is your firm? Is it a volume versus a value case? Are you just going to want to generate as much volume as you can and bring in,
Yep.
whatever cases. And so, that comes down to the marketing as well, and what your marketing dollars are being spent on. Or are you just looking for the valuable cases, the cases that are really going to bring in more money for you?
Gotcha. What kind of technology do you typically advise your clients to utilize? Is there any specific um, accounting software or anything along those lines that you would recommend?
So I would love to see everybody on cloud-based accounting software. I typically use QuickBooks Online. I have like one or two clients on Zero. Um, QuickBooks Online is, yes, annoying in some ways, but it's what works. It's the industry standard. Um, I'm really trying to get clients away from QuickBooks Desktop just because you can't access it from everywhere. It's not in the
Hmm.
cloud. Um, it's harder to get that real time data if it's on desktop.
Yep.
So that's definitely, number one. I think no matter what case management software you're using, make sure that most of them have ways to track KPIs and data and things like that. Use whatever case management software you are using to track those things. There are so many different case management softwares that it's hard to recommend just one. I went to ClioCon. I like Clio. I've worked on Clio. Other people have other ideas when it comes to that. So just use what you have to get the data that you need.
Gotcha. Even if it's spreadsheets, right? Have the data
Hmm.
somewhere.
Yep.
Um, I've our company and our team, we utilized overseas bookkeepers, not CPAs, not CFOs, but it was bookkeepers overseas, and because we didn't have that many transactions, but it was a godsend for us because we could wake up in the morning and have emailed reports. We wake
Hmm.
up and I have QuickBooks was updated every time. So, also QuickBooks Online for us, we use Zapier a lot. And
Hmm.
Zapier, if you're not familiar with it, it connects one software to another without having to code everything. So we would be able to add new customers to QuickBooks really easily with just an email or a trigger from HubSpot, things like that. So there's a ton of automation. You can get caught up in all that stuff, but definitely use the online version over the desktop on-premise version if you can, for sure. I agree with that.
Absolutely. Absolutely.
Awesome. Um, I think, is there any other advice you would give for a law firm owner to when to make that decision to bring a CFO or that outside perspective into their firm?
So I think number one, the day you start your firm, you need a bookkeeper. As soon as you can afford one. You need to set it, well, day one, you need to set up QuickBooks Online. Don't even try to use the Excel spreadsheets and all of that. You can get the cheapest QuickBooks for $30 a month. That's day one. As soon as you have, some revenue, definitely look at hiring a bookkeeper because that's going to help you start with compiling that data and making sure, that it's done in a way that you can make decisions. Um, Normally, when you reach the 500,000 to $1 million range, is when you should be looking at some outside help, CFO help, maybe on a quarterly basis. But as you're reaching that $1 million range, of revenue, I would say it's time to start looking at getting an outsourced CFO who can, really kind of oversee things and start helping you make those decisions. The growth, once you hit the growth to hitting 1 million is big. And then once you hit 1 million, on from that, there's a lot of growth there as well. So I think it's earlier than you may realize that you need help is when you'll need it. But from
Right.
day one, basic, start with the books, and make sure that you have accurate books. I will tell you it is a lot more expensive to get your books cleaned up than it is to start from day one. So make
Yep.
sure you have that as you grow because I'm a big believer in setting the foundation that you want to grow with for whatever you do. So processes, things like that. If your goal is growth, set the foundation when you're smaller so that you can grow with it. Makes a difference.
For sure. Yeah, like you said, data is everything, right? What comes in, if bad data is coming in, it's bad data coming out. But
Yep.
um, I think and when firms look to grow to say other multiple locations, they want to go into a different state or a different part of the state, having clean financials and an understanding and how to break that out is absolutely critical.
Absolutely.
And I think also I haven't seen a lot of this yet, but again, the comment private equity coming in different states, Arizona, and likely to happen in other states in the future. If you want someone to buy your firm, if you want to build it to sell, if you want to build it to be investable, your financials are absolutely key. And if you have them in a good spot, meaning it's clean, you've got processes, like Leah said, it's pretty consistent. When this happens. The folks that are doing the due diligence on either investing in your firm or buying are going to be not only impressed, but it's going to put them at ease. So
Yes.
very important. So like you said, that maybe just the frequency would change, bringing
Mhm.
somebody from the outside in. You're smaller once a month. As you grow, maybe once a week,
Yeah.
something along those lines.
Yeah, absolutely. And I know I personally offer different packages that are quarterly or monthly, and things like that, just because I want to help those law firms that are growing. I think it's exciting when you start growing to have big goals. So
Yep. And knowing your numbers and having that more certainty is something that helped me sleep for sure as a
yes.
business owner. And that am I going to make payroll 2 a.m. wake up is never fun. So
Yes.
all
Yep.
good.
Yeah.
Well, cool. Well, I think that was all the questions from the group.
Okay.
How do people get in touch with you and contact you, Leah?
So I post on LinkedIn just about every single day. And on LinkedIn, I'm Leah Miller, MBA. And I post tips, tricks, all kinds of stuff. I am glad to chat with anybody in DMs on LinkedIn as well. Um, and then you can always email me or go to my website. My website's lnmfinancial.com and set up a 30-minute consultation, and I can get to know you and your firm and what your revenue's at and what your goals are, and let you know what I can help you with for sure.
Very cool. Very cool. Well, I really appreciate you coming on and sharing your expertise. And I think so many businesses, law firms especially, can benefit from having somebody that knows how to set up the financial health of a business. And it just a big weight off of shoulders as a business owner for sure. So glad you could be here today.
Thanks for having me. It was fun.
All right. Well, we'll talk soon, and everybody have a great day. Thanks for joining us.